What's up, everybody? Michael and Coco here. You're watching the Stock Market Brief Show. Yes, I have the camera on. I usually do not. Figured I'd turn it on for a second so we can say hello. Aw, she's so cute. If you're new here, welcome to the channel. This is the Stock Market Brief Show. We use technical analysis, intermarket analysis to get a good idea as to where the market might be headed next. I'm very happy because I bought a stand-up desk off AliExpress. It was only $70, and I tell you what, it's nice. Got a lot to talk about in today's show. We're also going to bring up crypto. It's been a while since I talked about crypto, but it's taken off like a rocket ship. So let's go ahead and just get into today's show. Well, welcome back, everybody. Guess what? We broke out. Yay! We gapped up, we moved up higher, and we kind of sold off a little bit into the close. We're going to get more into this a little bit later, kind of in the conclusion section as to what to expect for the remainder of the week. This was the NASDAQ composite. I always say comp Q because I just read the ticker, comp Q. The NASDAQ composite, we've been talking about this on the hourly time frame with these positive divergences. We got that bounce. But really the question remains is if we are going to continue to see this rally or if it's going to be chop. And, you know, we'll go through some charts and kind of, I'll give you what I see, and we can kind of come to a conclusion altogether. If we take a look at the heat map, green, it's a very green day, yay. And what you can see here is really what really led the market. Well, it was the overextended to the downside FANG stocks, which we discussed on the prior market brief episode. Microsoft, Apple, Google, both of them, right? Facebook, Amazon. You know, those are all those FANG, even NVIDIA, right? All the FANG stocks here really did quite well. And that really helps the market, obviously. Now, when you take a look at the NASDAQ 100, we broke down through this channel. We gapped up, right? We recouped, but we're still beneath it. And we're still right on the 100-day moving average. And, you know, the bulls still have work to do. This is not a victory by any means right now. So it's still a time to be very tactical. I want to kind of present this to you. I'm looking at the Qs. This is on my screen for Thinkorswim platform, but I posted this on Twitter. If you don't follow me there, you can follow me there. But I wanted to call out this channel really since this August, since before this last August peak, and you can see here, it's been tagging it as resistance, resistance, resistance. It's been quite good, and you can even see here, support, 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 and now we're moving down into this area again. So really, you know, I've been hearing, okay, no, this is the bear. This is where the bear market starts because we're putting in lower highs and lower lows. And yeah, I can understand that because if you take a look, right, from the short-term perspective, you have a low here, you have a high, a lower high right there, and then you have a low and then a lower low. So that makes sense, right? It makes sense, but if you look at a longer time frame, you get a high, a higher high, a higher high, you get a low, a higher 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 low. So if you're looking back, you look at this and it's like, oh, okay, well, maybe all this right here is just typical fear. The same type of fear here, the same type of fear here, the same type of fear here, and the same type of fear that we saw there. I mean, really, we're only down like, what, 5 or 6% from this previous high, and we're still in this overall trend channel. I'm not saying that you can't be bearish here, you know, because the short term, we still have some pressure. We still have a lot of work to do. But if you, like I said, if you scope out a little bit, you can see, oh, well, actually, we're still trending up. And, you know, maybe all this fear that we're currently seeing right now, it's really driven from narratives, not quite from the technical perspective. It's just a different view that I wanted to kind of present. If you take a look at the S&P 500, this was a big technical breakdown. That has implications. That started all this chop, right? We bounced up from there. We almost retested. We started heading lower, and we're sitting at the lower Bollinger Band and at the 100-day moving average. So really, there's still a lot of work, you know, and a lot of kind of just confusion within this area. And I just don't see the trade to either go long or short here. Unless if I zoom into smaller time frames. You just need to be very mindful, very careful, very tactical, and we'll talk more about that in the conclusion section because we got a lot to discuss here. On the 15-minute time frame, look at where this gapped up. We were looking at this bear flag right here, and you can see here it gapped right here, left that air pocket right through this bear flag, and we shot up. we kind of, we ramped, we gapped, re-ramped, we camped, kind of drifted higher, and then it was done so on a negative divergence, and then we got that kind of close below the 5-day moving average. So as it stands right now, I mean, it's the 5-day moving average, it's still declining. The price action just got below it, so it's nothing to get overly too excited about. What we could potentially watch for, key levels, I mean, 363, 362, this kind of zone in here, it's forming a potential shoulder, a potential head, and we could potentially form another shoulder. If it breaks through this neckline, well, guess what? That can take us up, 10 points or so, right? Let's just call it 350 to 363, so it could take us up 13 points. 13 to, where would that be? 363, so 376, so it would even be higher than this if that's a full measured move breakout of an inverse head and shoulders. But we're not there yet, right? We're not there. Short term is still bearish. We'll continue to watch. Let's take a look at VIX. So the volatility right now, you can see it remains relatively high. We saw it shoot down today, but into the close we had a little pop. Look at volatility. It still remains high, and it's just chopping back and forth, which tells me, okay, it can go in either direction still. We have one gap above us. We have one gap, well, technically 3 gaps beneath us, but it's just pinned between these 2 gaps, and those can act as levels of resistance and or support. So it's really anybody's guess as to which way this really wants to take off. So really what it comes down to is you just need to be very mindful, very tactical in this current environment, and don't make any heroic type trades right now, because it could literally go in either direction. It's a time to be very patient. So this is not the time that you want to rush into something and try to make money back. If you've lost money, or try to make more money on top of what you've already made, this is a time to just be very tactical. If you take a look at the Dow Jones Industrial Average, also look at this chop. Big red day, big green day, big red day, big green day. Lots of confusion, lots of chop. As what? We have the debt ceiling debacle, we have the infrastructure, but we have so many different things. We have more stuff coming out next week. I mean, we have so many different things taking place right now. It's not the time to be very, very aggressive. It's the time to be tactical, right? We're still below the 50-day moving average. We're below the 100-day moving average. This could be forming somewhat of a little flag right here. You can see the pull. Possibly, and that could take us down to around this zone right here, which is 32.5 to 33,000. We'll continue to watch that, but there's nothing I want to jump in front of right now in the Dow Jones Industrials. And then you take a look at the 15-minute time frame, very similar story. We gapped up, we ramped, we camped, and then we had the negative divergence and pumped down, but we did manage to close above the 5-day moving average. But just take note, right? What's the 5-day moving average telling us? It's telling us this trend is neutral to slightly down because it's not going anywhere, all right? And then the price action, it's just chopping, boom, 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 everywhere. Like I said, it's range bound right now. So right when it gets up to this range, which is about 346, you can potentially short it. When it comes down here, you can potentially go long, and then you take profits in the center of the channel. That's really all that's been taking place right now as of recently. We have range trading, and we have just this like ping-ponging back and forth. All right, if we take a look at the IWM, Russell Small Caps, this thing is coiling up very tightly. I can see this making a move here quickly. So the trade's not there yet, but we're pinned in the middle of this channel. You know, everyone has their eyes on this, but I would say we're going to start really moving here aggressively in a direction very shortly. You can see that this candle that printed today, this indecision candle, the bulls had control, then the bears had control, and then we ended up closing right back on the 50-day. Look at all these moving averages just coiling up super tightly. So I'm thinking that if we start breaking above this 222.60 or 222.50, let's call it, I think that we pop up higher and go test the top of this channel. If we start breaking beneath this 217.50, I think we go test the lower range of this channel. Is that enough juice to break down, or is that enough juice to break out? I don't know. No one knows, and anybody that's saying that they do know for certain doesn't know for certain. We just don't know. Anything could happen. I mean, shoot, for all we know, it can come, break down like this, and then snap back and just rocket ship higher, or vice versa, shoot up a little bit, fake us out, and then just take us right back down. So like I said, you need to be tactical and you need to set up the trade. Me personally, I'd say if it breaks down through 217.50, I would play it down to this range right here. And I might even hold some of the short, and if it breaks down, awesome. If it doesn't, if it starts moving up, I would exit out the position. If it's going to break out of this 222.50, 222.60, I'd go long, and I would play up into this range, and or, you know, potentially take profits right around there. That would just be a quick scalp. You know, you can do an options trade, so the risk is already built in. You know, just keep it simple. It's not too complicated. If you look at the 15-minute time frame, you can see here we are coiling up quite tightly. The price action these couple of days, we shot up, we came back down, we consolidated, we shot back up, we came back down, then we consolidated. So I think that if we start breaking down, yep, we go take out this previous gap and potentially even down this low at 214. If we start breaking out of this, which we're back above the 5-day moving average ever so slightly, which is still neutral, but if we don't break out of this, we close this gap right above us and then potentially try to take out 227.50 would be my best bet. Let's hop into the Sailor to Shift rotation move chart thing. This is the chart, the signal chart that I use to buy and sell Bitcoin. It's fairly new. I created it. It started off as a joke, like I was just making a joke between like taking, you know, the both Bitcoin and comparing the ratio to obviously gold and then applying the rate of change to it. And it started as a joke because it's like I took two complete opposites, right? You have the Bitcoin, you know, maximalists. You have what's his name? Michael Saylor, and then you have the gold bug, the extreme gold bug, which is Peter Schiff. Call it the Sailor to Shift rotation strategy. If you haven't watched this video on how to create this chart, I show you. I even created a little strategy around it. The last buy signal that took place. Well, the last buy signal was right here in mid-July. I think it was July 20th or something like that. Look at that. We took this run up, and then I got stopped out right down a little bit lower. That was a 40% run in the price of Ethereum, 20+% run in Bitcoin. Then we had the sell signal, right? That dropped from peak to trough 23%. And just yesterday, guess what? We had that buy signal. I entered in earlier today, and pow, right up to the upside, already seen some strength. And now I want to kind of go into the charts because I'm hoping that this is the start of a bigger up leg. If it's not, it is what it is. Actually, I don't even know if I'd be taking a loss at this particular point in time because it moves so quick in my direction. It's always possible, but I'm going to sell when I hit the next sell signal. And hopefully this is the start of a bigger run up like we've seen in the past. Like boom, all the way up here before that sell signal. So hopefully it's a big start of a trend. I would like that, but you know, we don't know. Now, why am I getting excited about it? Well, Bitcoin, if you just take a look at this little technical pattern here, big resistance, you know, downsloping trend line going down, and guess what? We're breaking our little head out right now. We need a couple daily closes above that to feel more confident. We really need to take out this previous swing high right here at about, what is that, 52,500, give or take a little bit right there. But this could very well be an inverse head and shoulders. We have the left shoulder head, and we have the right shoulder. And if we break out, a full measured move would take us to 80,000 plus in the price of Bitcoin. You heard it here, folks. 80,000 plus in the price of Bitcoin. I think it'd be a bumpy ride. All right, it could be definitely bumpy, but Bitcoin is showing some strength here. And one thing that I noticed that I haven't heard anybody really talk about is the market's been falling. All right, so the market has been dropping right here, right? And NASDAQ 100, S&P 500, etc. Bitcoin has been showing strength, which is something a little bit new. Now, if you remember, a while ago, I was talking about this correlation that I saw between Bitcoin and the S&P 500. And the correlation that I saw was like Bitcoin almost led the price of the S&P 500 by like 7 days, 5 to 7 days or so. That correlation kind of broke off during this kind of crash right here. But for a while, it was like, oh, okay, Bitcoin starts moving up, S&P 500 is kind of relatively flat, but like 5 to 7 days later, all of a sudden the S&P 500 started running. And in my head, I'm like, if that correlation's back and we're starting to see, obviously Bitcoin took a little bit of a nosedive right here. That was the sell signal, right? Okay, and now what do we start seeing taking place? We started seeing the S&P 500 fall, right? It started going down pretty recently. And now we're starting to see Bitcoin pick up. So perhaps, you know, if that correlation's kind of back into play, we're going to start seeing the S&P 500 and the broader indices potentially start to take off here too. Is that going to be for certain? No, that's completely speculative, but I do like this breakout so far. I'm pretty excited about it. Overall, if you take a look at Ethereum, this looks like a gigantic cup and handle pattern. So this is, I mean, big cup right here. You got this handle right here, but we're still far from this little neckline right up here. So we still have a lot of work to do there. But Ethereum, I mean, if we start taking out this trend line, this downsloping trend, which we're back above all the key moving averages right now, holy moly, this thing could really start to fly, because this came down to around, you know, 1800, and then it came up to a high of just, let's call it just over 4,000. So we're talking like this thing could run 5,000, 6,000 in kind of that zone up ahead if we start breaking out. So like the crypto market's looking pretty awesome right now. You know, it can change in a heartbeat, right? It can change, but as it stands right now, it's looking pretty darn strong, and that's something not to ignore. Meanwhile, take a look at oil. Holy moly, right? We have all the news around the energy crisis. All this stuff's going on. Energy continues to spike higher and higher. Sorry, oil continues to spike higher and higher. We closed at $78.93. We had a high of just about $80. $79.48 was the high. I think that we can touch it. I think we can tag it. I will say the energy stocks have been performing very well. It was very strong on the day, but this is a very, very overextended move. I mean, look at it, from 46 to 56, a $10 swing in like a couple weeks of trading. That thing is completely vertical. You know, it needs to probably sit around and either consolidate sideways, take a nosedive, fill this gap down here. That'd be about a 50% correction if it fills this gap on this recent run up. And we typically see things like that. We get these big spike up, we get a 50% pullback, and then we see a continuation. You know, it's something to pay attention to, but this is not where I'd go long right here. Can we go higher? Obviously, but you know, the RSI is getting a little burnt up. We're above the upper Bollinger Band, which I didn't have that up on here. And then, you know, also the PPO, it's also just completely just nice spread heading up there too. So it's not something that I would necessarily short either. You could if you're building in the risk with like a put option, but just be careful, because, you know, you're walking in front of a train right here. This thing is moving straight up, and you can get lucky, right? You could get a little bit of a pullback, but it could be a very aggressive, bumpy type ride. Let's take a look now at the dollar. The dollar recently broke out. We're pulling back. We saw a little bit of strength today. Look, if the dollar starts seeing significant more strength and starts getting above this area too, I think that's going to continue to put pressure on the equity markets, especially like certain commodities like precious metals. We've been seeing them kind of lag. But so far, you know, this is a very strong move. We're coming back to around to back test it. And the dollar's looking fairly strong on this breakout above 93.50. So that's something that we're going to continue to monitor and watch. Meanwhile, the 10-year yield closed at 1.5. This is looking at the TNX, and this still looks pretty strong. We could very well potentially be flagging, which brings us up to another leg higher, which could bring us to around 1.7. We're not there yet. And if that's the case, if we get another fast move, and keep in mind, it's the rate at which this moves is what puts a lot of pressure on tech. You might be wondering, well, we were up 3.24% today. How come tech went up? Well, because if you looked at tech yesterday on our charts at the beginning of the video, tech was very overextended to the downside. So we're getting a relief bounce in tech. And if this continues to press higher, well, that probably means that tech's not done falling right now. And you can see a lot of the tech stocks started to sell off into close. Netflix today, I don't even know what was going on with Netflix, but Netflix, it had a bearish looking candle the other day, this big outside trading day, but today it's like the star of the show. That thing was ripping for the majority of the day. I forgot to look at where it closed, but holy moly, that thing was just on fire. Now, let's look at a couple signal charts, a couple indicators. This is the NIA, this is advanced decline volume line, and we've been calling out, hey, pay attention, there's a little bit of a positive divergence, right? The S&P 500 is making another low. This is, you know, putting in a higher low, and now we saw a little pump up right to the 200-day and 50-day moving average. So positive divergence is currently playing out right now, right? We said when it hits this RSI, we typically can see a bounce, okay? We saw a little bit of a bounce, came back down. Now we see the positive divergence. Is it going to continue? Well, we'll continue to watch this and see how it develops. It definitely still can move up higher, that's for sure, because the positive divergence is still there. All right, let's look at the NIA. This is advanced decline issues. This is still within the channel, right? We're still trading sideways. So I'm not seeing any breakdown, right, yet, at least. No panic. And yeah, I mean, we've been seeing the divergence, right? This has been going higher, and this was been putting in lower highs. And that divergence we were monitoring, we were watching, and it mattered when it mattered. And guess what? Now we're starting to see a pullback, right? It hasn't been an aggressive pullback. People are calling this a crash. It's not a crash. This is controlled selling. Controlled selling at, you know, yeah, it's not a crash. Okay, anybody that calls this 5% move to the downside, I call it healthy. That's all it is. If we take a look at the NASDAQ new high, new lows, right? We've been talking about the negative divergence there. Well, guess what? This as well has a, you know, a low on the NASDAQ to a lower low on the NASDAQ, and then we had a high to a higher low. That's a positive divergence there too, suggesting that we could very well bounce still, right? So there's a lot of positive things going on. There's some bearish price action, but you know, I'll talk more about it in the conclusion section, but also here, the NIMOT, we're still below zero, but we're not like some extended level to the downside. We talked about the positive divergence, we got the bounce, and we're still relatively high, right? This is still a positive divergence taking place here, which signals that we can still very well bounce. And if you take a look at the NYSE McClellan Summation Index, we are still below zero here, but you know, this also could be getting a little fried here where we might start to see it turn up, and then we can see the market really start to take off again back and keep it on its uptrend. But as it stands right now, it is still below zero. And even though we got the bounce today, we still went down some in the McClellan Summation Index. So, you know, pins and needles over here. Now, another chart that kind of has me a little worried is looking at the housing index. The housing index, right? We've been watching this divergence for quite some time. We were talking about how it was a high to a lower high, and then the market kept on putting in higher highs and higher lows. And now all of a sudden, we're starting to see it catch up to the downside. But, you know, we need the housing index to perform well, you know, in order for the market also to continue its up leg too. This makes up a big portion, right? This is a big drag on the economy if the housing market's falling apart. And what I'm seeing here is this move strong to the downside, this pull, and now it's kind of just like stair stepping very slowly, right? Walking down a cliff, lower highs, lower lows, or not really lower lows. It's really just kind of walking itself like potentially off a little cliff right here to do a little nosedive. So I'm going to be continuing to watch this one and how this unfolds, but that is one big red flag that it's just been kind of on my mind. Now, people have been asking about the lumber to gold ratio. The lumber to gold ratio, it's still below zero. When it actually went on, and if you don't know what this is, Michael Gayad, I interviewed him twice on this show, and he, you know, is a developer. He wrote a white paper on the lumber to gold ratio, and I'm not going to go too much into detail, but go just Google it, right? And you can learn about it. You can read his white paper. But what I did notice here was we had that risk off moment right here in middle of June. Okay, that was right around this candle. And what do you know? I mean, like, where did we go since then? We came up, and now we're back down where we touched back right into mid-June. So we haven't gone anywhere since this risk off event happened. Now, if it clicks back over zero, that is a risk on, which kind of signals, okay, things are good again, back to risk on type environment. You know, there are no storm clouds on the road. And now, you know, when we cross that road, we'll cross that road. We're not there yet. We're still technically in risk off, but it is pointing up in that direction. If you take a look at the price of gold, I'm not going to get too much into gold right now because there's not much to talk about. It's overall in this like downtrend since August, right? Lower highs, lower lows. But really, I mean, I would just call this trend just sideways chop, right? I mean, literally, we're just going sideways. Boom and boom. It's like it's not going anywhere. There's not much to report on it. But I will say, you know, there's a possibility that this is 1840 is a neckline of an inverse head and shoulder, right? We had the left shoulder, head, right shoulder forming right here. We'll see if that holds true, but there's still a lot of work to do to get up here, back into the 1800s. Then we might need to take a little pause and then pow, and then we have this right there at 1920, which is also another area of resistance. Now, what I do find interesting is the price of silver. So silver is actually forming this falling wedge. We broke down through this massive area of support, and this could be in a little bit of a bear trap. It's still too early to tell, but we had the positive divergence in the RSI, and we had a positive divergence in the price percent oscillator as it's doing a bullish crossover, still below zero. But that's a good sign so far. All the moving averages are pointing down, so it's going to be swimming up a river here. But we did break out of this falling wedge. Perhaps that gives us a little bit of a push back up to the upside in the price of silver. So that I'm pretty excited about, but it's still not quite there yet. You know, it's swimming up a river, so it's not something that I would want to jump right into right away. But I do see the possibility for perhaps a bounce coming here. Now, like I said, if we start seeing strength in the dollar, continued strength in the dollar, that's going to put pressure on both gold and silver. I would guess, right? There's been times where gold goes up with the price of the dollar, and like for example, like if we were to kind of walk through that, what would that mean? Well, people might be flighting, it might be a flight to safety, right? So if you go into dollars, right, and all of a sudden like the TLT, right, the TLT has been going down, so bonds have been going down. Where does people go that they want to flush out of equities? Well, yeah, they can go to Bitcoin, right? They can go to crypto. It's been going up, so why not? But then also you have other people that might be like, okay, yeah, I need a flight to safety, which could be potentially gold, could be potentially silver. So that's a possibility where we see both of them rise together. And we'll see how that, you know, if that actually plays out or not. But keep in mind, just right now as it stands, the price of gold and the price of silver, I mean, they're just the trade's not there, and the sentiment is extremely bearish. So I still have long-term positions. I think the long-term price of gold, silver, I think it's going up. I think it's going up a lot higher, and I personally believe that when the move happens, it's going to be a move that you're not going to want to chase, right? It's just going to probably move at a very strong pace, and if you missed it, sorry, you missed it. But if you build a position, you have some stuff, if you had a little bit of a portfolio in gold and silver, you know, you can catch that run. But like I said, I'm not like over leveraged in any one asset, any one commodity. I play it pretty simple. So I'm getting off track a little bit. All right. That's all I got for you on today's show, everybody. Just to really wrap up my thoughts. This is kind of the conclusion, okay? What do I suspect to take place? I think that we're just going to be range trading. All right, that's a lot of stuff I just went over, really to come to the conclusion that I think that we are just going to be continuing to be in a range until we pass through this debt ceiling debacle stuff. You know, we're going to hear more about the infrastructure bill. I don't see this huge black swan event happening right now, right? We're talking about Evergrande, all this other stuff. I mean, but hasn't affected the U.S. market. If you're very bearish, like on Evergrande and like the Chinese market, then just short that market, right? It's been atrocious. It's been horrible performing. So, you know, it's just, can something big happen? Obviously, but as it stands right now, we have this week to get through. It's probably going to be just choppy. You know, I think we need to get through all of this stuff and then kind of understand where the market wants to go, and then you jump into it. So instead of being first to the move, just wait for the move to happen and join the crowd on that move. Join the market on that crowd, on that move. Because if you get in early and you're wrong, well, you know, it could take a blow, unless if you're really managing your risk. That's all I got for you on today's episode, everybody.